walk beside you as you pursue your goals and chart your own path. Investing on the Malawi Stock Exchange is an opportunity that is available to each and every Malawian. By buying shares and bonds, you embark on a journey of building your own worth and that of your loved ones. The process of investing on the Malawi Stock Exchange is easy. You simply need to select a broker, open a brokerage account with your broker for free, and start investing. The broker will also guide you on how you can open a central securities depository account with the Reserve Bank of Malawi, where your record of ownership for shares and bonds will be securely kept. Start investing today. Life is a journey, and each day presents itself with new challenges and opportunities. That is why, at the Malawi Stock Exchange, would want to walk beside you as you pursue your goals and chart your own path. Investing on the Malawi Stock Exchange is an opportunity that is available to each and every Malawian. By buying shares and bonds, you embark on a journey of building your own worth and that of your loved ones. The process of investing on the Malawi Stock Exchange is easy. You simply need to select a broker, open a brokerage account with your broker for free, and start investing. The broker will also guide you on how you can open a central securities depository account with the Reserve Bank of Malawi, where your record of ownership for shares and bonds will be securely kept. Start investing today. Life is a journey, and each day presents itself with new challenges and opportunities. That is why, at the Malawi Stock Exchange, would want to walk beside you as you pursue your goals and chart your own path. Investing on the Malawi Stock Exchange is an opportunity that is available to each and every Malawian. By buying shares and bonds, you embark on a journey of building your own worth and that of your loved ones. The process of investing on the Malawi Stock Exchange is easy. You simply need to select a broker, open a brokerage account with your broker for free, and start investing. The broker will also guide you on how you can open a central securities depository account with the Reserve Bank of Malawi, where your record of ownership for shares and bonds will be securely kept. Start investing today. Life is a journey, and each day presents itself with new challenges and opportunities. That is why, at the Malawi Stock Exchange, would want to walk beside you as you pursue your goals and chart your own path. Investing on the Malawi Stock Exchange is an opportunity that is available to each and every Malawian. By buying shares and bonds, you embark on a journey of building your own worth and that of your loved ones. The process of investing on the Malawi Stock Exchange is easy. You simply need to select a broker, open a brokerage account with your broker for free, and start investing. The broker will also guide you on how you can open a central securities depository account with the Reserve Bank of Malawi, where your record of ownership for shares and bonds will be securely kept. Start investing today. journey, and each day presents itself with new challenges and opportunities. That is why, at the Malawi Stock Exchange, we want to walk beside you as you pursue your goals and chart your own path. Investing on the Malawi Stock Exchange is an opportunity that is available to each and every Malawian. By buying shares and bonds, you embark on a journey of building your own worth and that of your loved ones. The process of investing on the Malawi Stock Exchange is easy. You simply need to select a broker, open a brokerage account with your broker for free, and start investing. The broker will also guide you on how you can open a central securities depository account with the Reserve Bank of Malawi, where your record of ownership for shares and bonds will be securely kept. Start investing today. Life is a journey, and each day presents itself with new challenges and opportunities. That is why, at the Malawi Stock Exchange, we want to walk beside you as you pursue your goals and chart your own path. Investing on the Malawi Stock Exchange is an opportunity that is available to each and every Malawian. By buying shares and bonds, you embark on a journey of building your own worth and that of your loved ones. The process of investing on the Malawi Stock Exchange is easy. You simply need to select a broker, open a brokerage account with your broker for free, and start investing. The broker will also guide you on how you can open a central securities depository account with the Reserve Bank of Malawi, where your record of ownership for shares and bonds will be securely kept. Start investing today. Life is a journey, and each day presents itself with new challenges and opportunities. That is why, at the Malawi Stock Exchange, we want to walk beside you as you pursue your goals and chart your...
Good morning once again. Apologies for that little glitch. We were facing some technical difficulties here. Nonetheless, we'll proceed with our webinar where we'll be looking at how you as the investing public can participate on the bonds that are listed on the Malawi Stock Exchange. So as I was saying, for those who are not familiar with the Malawi Stock Exchange, we are a licensed financial institution that provides a platform where companies can actually come and raise capital for their businesses. So this is primarily done through issuance of shares as well as bonds. So in addition to this role of providing the platform for businesses, we're also involved in raising awareness of these products and services that are provided by the Malawi Stock Exchange to the investing public so that you're aware of the opportunities that are available for you to invest. So if you've been following us for a while now on our page, you will know that we've had similar seminars or webinars where we've primarily concentrated on the shares or the equity market. So if you've not had a chance to look at those videos, you can do so that you can learn one or two things about the shares and how you can participate in shares. But for today, we're focusing on the bond market. Further to that, in terms of the financial literacy awareness initiatives, we're also involved in quite a number of activities. The most recent being the Global Money Week that we had earlier on this year in March, where we actually had an open week where we're inviting the public to come to our offices to engage with us and understand the products that are available on the Malawi Stock Exchange. You also had the opportunity to engage with other key stakeholders within the financial sector who are also available during this open week, also availing their products and services so that you as a consumer have the right information when it comes to investing. So as the Malawi Stock Exchange, we truly do believe in collaboration when it comes to issues of financial literacy awareness. And this presentation of investing on the bond market. So we have members from our stockbroking community. We have 3 stockbrokers, as you know. We have Stockbrokers Malawi. We have Continental Capital. We also have Clear Capital. So they'll take you through presentations around the bond market and how you as the investor can actually participate and what are the benefits. So we would encourage you to actually engage with them, participate. There'll be a Q&A session towards the end. So we encourage you, whenever you have a question or you need clarification, anything, you can comment in the comment section, and then we'll be able to address that towards the end. We also have a team that will be addressing some of the comments if they can at that particular point. So with those few remarks, I invite you to sit back, relax, and engage with our presenters and enjoy the session.
Mr. Banda.
Hello, Mr. Perry.
Wow. You know, it is very evident that you're doing so good.
Thank you.
You see, even your business is doing so great. But wasn't it only last year when you were telling me great plans you had for your business, but you complained about not having enough money to invest?
Well, all of that has changed, Mr. Perry. I made a decision to list my company on Malawi Stock Exchange and managed to raise about 2 billion kwacha. I used that money to invest into my business. And now my business has grown at a rate that I could not even imagine.
2 billion?
Yes.
You must be paying a lot of interest on that money.
Not at all. If anything, raising capital using Malawi Stock Exchange has greatly improved the financial position of my business. You know what? The cost of raising capital was under 5% of the total money that I raised.
Unbelievable. So listing is not as expensive as I thought.
And if that is not enough, listing my company on Malawi Stock Exchange has greatly improved the visibility as well as the profile of my company. Now I'm able to do business with both local and international players. And you know, business practitioners, they have confidence in my business because they know my company is listed on Malawi Stock Exchange.
Wow, wow, wow. You know what? I'm very impressed and inspired.
Thank you.
And I too will list my business on the Malawi Stock Exchange.
Please do that, Mr. Perry.
Yeah.
But I have to go now.
Yeah, thank you very much.
Thank you.
Thank you, Mr. Perry.
Malawi Stock Exchange, Malawi's global portal.
Mr. Banda.
Hello, Mr. Perry.
Wow. You know, it is very evident that you're doing so good.
Thank you.
You see, even your business is doing so great. But wasn't it only last year when you were telling me great plans you had for your business, but you complained about not having enough money to invest?
Well, all of that has changed, Mr. Perry. I made a decision to list my company on Malawi Stock Exchange and managed to raise about 2 billion kwacha. I used that money to invest into my business. And now my business has grown at a rate that I could not even imagine.
2 billion?
Yes.
You must be paying a lot of interest on that money.
Not at all. If anything, raising capital using Malawi Stock Exchange has greatly improved the financial position of my business. You know what? The cost of raising capital was under 5% of the total money that I raised.
Unbelievable. So listing is not as expensive as I thought.
And if that is not enough, listing my company on Malawi Stock Exchange has greatly improved the visibility as well as the profile of my company. Now I'm able to do business with both local and international players. And you know, business practitioners, they have confidence in my business because they know my company is listed on Malawi Stock Exchange.
Wow, wow, wow. You know what? I'm very impressed and inspired.
Thank you.
And I too will list my business on the Malawi Stock Exchange.
Please do that, Mr. Perry.
Yeah.
But I have to go now.
Yeah, thank you very much.
Thank you.
Thank you, Mr. Perry.
Malawi Stock Exchange, Malawi's global portal.
Good morning, ladies and gentlemen. Today we are talking about investing in bonds on Malawi Stock Exchange. My name is Regina Kachingwe, equity dealer for Cedar Capital. Cedar Capital is a stockbroking firm that specializes in corporate advisory, stockbroking, research, and personal investment advice. Our core objective is to make sure that our clients are best executed and are assisted in achieving their investment goal. We prioritize in research for all the listed companies on the Malawi Stock Exchange,
We also do our weekly reports that include corporate and political overview. You might have heard what bonds are. And to some, this is the first time they're hearing something about bonds. You might have questions. What is a bond? Why should I invest in bonds? What is the benefit of investing in bonds? What are the types of bonds? I'll simply take you through the overview of bonds on the stock market. What are bonds? Simply put, these are monies borrowed by government, local governments, such as cities, districts or towns, state-owned corporations, or a company. A bond is a fixed income instrument that represents a loan made by an investor to a borrower, typically corporate or governmental. A bond could be thought of as an IOU between the lender and the borrower. That includes the details of the loan and its payments. When you buy or invest in bonds, you are lending money to the government, state-owned corporation, or a private company. Government bonds in general, fixed income securities, are classified according to the length of time before maturity. What this simply means is, I'll give you an example of getting a loan at a bank. When you want to get a loan at the bank, in this context, the bank is the lender and you are the borrower. So with bonds, it's the vice versa, whereby you as an investor, you are lending money to the government, where the government is now a borrower. There are two ways bonds can be acquired. There's a primary market as well as the secondary market. A primary market is the market which allows sale of newly issued bonds. The primary market is also known as a new issue market. Newly issued bonds can be registered with the regulators for sale to the public, which is known as a public offering, or sold only to qualified investors, that is private placement. In this market, the bond is being issued to the public for the first time. So this is the stage whereby the bonds, like making the investors aware of the new issue that is coming. So they advertise for a period of time, and then they mention the date when they will issue that particular bond. In so doing, they are preparing the investors. In this context, you, the investors, they are preparing you, letting you aware to know of the bond coming up so that you can prepare it in the public offering. At this stage, the market is given a period of time where it opens for investors to place their bids. This is regulated by being given a time frame to say from such a day to a specific date, the bid market is open, whereby investors can place bids. And when the bid market is closed, it means you can no longer place your bids to participate in the bond to be issued. So on the date that the bond has been set to be issued, that's when the actual placement is done. There is also a secondary market. This is the marketplace where investors can buy and sell bonds. A key difference compared to the primary market is that proceeds from the sale of bonds go to the counterparty, which could be an investor or a dealer. Whereas in the primary market, money from investors goes directly to the issuer. In this market, the bonds that were already issued in the primary market are available to the public for new investors to buy, at the same time for the investors that bought in the primary market to resell. So this is now the stock market, whereby bonds that have been issued in the primary market are coming for the second time in the market to be accessed by the public, whereby new investors can come in, as well as the investors that participated in the primary market. There are a number of characteristics of bonds on the stock market. Some of them include the following. There's an issue date. This is the date a bond is issued. Like I mentioned, that when a bond is being issued, a date is set to say on such a day, a bond is going to be issued. So that's the issue date. That is the day that the bond will be available for trading. And then there's a settlement date. This is a date where the bond payment is due. When they issue a trading date of a bond, they also issue a date that the bond is going to settle. In this scenario, bonds do settle at T+0. This simply means that the very same day that the bond is being issued is the very same day that the bond will settle. So in this context, what it simply means is the investor who is buying the bond will have to pay the issuer for him or her to acquire the bond. There is a maturity date. This refers to the date when an investor bond's principal, that is money placed or invested, is repaid with interest. Every bond has a maturity date. A bond has a time frame whereby when you're buying a bond, you simply know to say, okay, this bond is going to be for 3 years, or is going to be for 5 years, or whatever agreement date you're going to have. So for a bond that is going to run for 3 years, after 3 years, that's where the bond is going to mature. So this is the date that you are going to come out with all the money that you placed in the first place when buying a bond, and the interest that you have earned from that investment. That is the maturity date. There is also a coupon rate, also known as interest rate. This is the rate of interest paid by bond issuers, in this case, the government, on the face value for each investor. This is decided by the issuer of the bonds to the purchaser at a time of issue. The coupon rate is offered by the issuer, in this case, which is the government, to the purchaser, who is the investor. When you are investing, say, 100,000 in a bond that is being offered, the government will simply tell you to say, okay, our interest is 10%. So that coupon rate, that is the interest that the government determines on what they are offering. So you as an investor, you get that coupon rate that is most of the times paid semi-annually. It is paid twice a year by the government. So that's the interest that you're going to get by investing in that particular bond. And then there is the coupon frequency, the number of coupon times the bondholders receives. Like I've already said, most of the bonds, government bonds, are paid semi-annually. Some are paid annually, as well as quarterly. This is something similar with stocks, whereby you can relate this with a dividend payment. There are some companies that pay dividends quarterly. There are some that pays twice a year, or maybe once a year. So this is the same in bonds, whereby the frequency of the interest that is paid in bonds is semi-annual. There is yield. This is the expected rate of return of an investor. When you're participating in bonds, when you're entering into the bond market, you have your expectation of yield. This is how much am I going to get after my investment, say, of 3 years. So the amount of money that you are going to get at the end of the period of your bond is what the interest incurred is what you have yielded from the money that you invested. Then there is the face value. This is the amount that an investor receives at maturity. When the bond has matured, you have invested a bond of, say, 5 years, and then it has reached its maturity date. It is maturing today. The amount of money that you are going to come out with is the face value. You might have a question to ask, why should I add bonds to my portfolio? Bonds are investment than stocks. They tend to be long-term investments and are considered a great way to diversify your investment portfolio. What it simply means is you have to have a number of ways of investing your money. It is said that you don't put all the eggs in one basket. For example, in stocks, we've got a number of counters listed on the Malawi Stock Exchange. You are advised to participate in all the listed companies than to put all your investment money in one company to spread the risk. So bond is another asset where you simply have to add to your portfolio as a way of diversification. I'll leave you with a quote of the day. Bottoms in the investment world don't end with 4-year lows. They end with 10 or 15-year lows. This was quoted by Jim Rogers. Think twice and invest in bonds now. My colleague will take you through on the benefits of investing in bonds.
Ulemu, ndakhala ndikumva zambiri za masheya, mabondi, ndi msika wa masheya. Kodi zimatanthauza chani? Nanga ndingatenge nawo gawo bwanji?
Mwayi ndizosavuta. Ndi Malawi Stock Exchange mutha kupeza phindu la ndalama zochuluka kudzera mu masheya kapena mabond. Mukamagula masheya nanu mumakhalanso mwini wa kampani yomwe mudagula masheya. Ndi mabond mumayipatsa kampani ngongole yomwe imadzakubwezerani nyengo yomwe munagwirizana ikakwana.
Ndi choncho tsono pamene pali phindu lanji pogula masheya pa msika umenewu?
Mumalandira ndalama zomwe zimagawidwa ndi kampani kuchokera ku phindu lawo zotchedwa dividend pa Chingerezi, ndipo limakhalanso phindu kwa inu pamene mtengo wa masheya ukukwera. Sizokhazo ayi, masheya anu atha kugwiritsidwa ngati chikole ku mabungwe ndi mabanki obwereketsa ndalama, ndipo pa nthawi imene mwafuna ndalama mukhozanso kuwagulitsa pa msika omwewu mosavuta. Pamene ndi mabond mumalandira chiwongoladzanja ndi kupeza phindu lochuluka.
Koma ndenzopatsa chidwi sindinadziwe izi. Kodi ndingayike bwanji ndalama zanga pa msika umenewu?
Ndizosavuta. Zomwe mukuyeneka kuchita ndi kupezana ndi stock broker ndi kuyamba kuyika ndalama pa msika ulero.
Ndiloleni ndithamange ndi kuyamba kuyika nawo ndalama pa msika wa Malawi Stock Exchange.
Malawi Stock Exchange. Kuti mumve zambiri, imbani foni ku Malawi Stock Exchange pa nambala 0182423 kapena 01823 kapena tumizani email ku info@mse-mw.com. Malawi Stock Exchange.
Malawi Stock Exchange, Malawi's global.
Good morning. My name is Kondwani Magwagwa. I work as equity and money market dealer for Stock Brokers Malawi Limited. Stock Brokers Malawi Limited is a subsidiary of National Bank. One of our roles as a stock broker is to broker or to act as an agent for investors who wants to buy and sell listed securities. Listed securities, examples are the normal shares which we are familiar with, and also the bonds which are subject for discussion today. I strongly believe that at the end of my presentation, I should be familiar with the benefits, the risks, and the minimum amount one can invest in bonds. As my colleague already said, bonds is all about borrowing. It's about borrowing by government, corporations. You would agree with me that when it comes to issues of borrowing, we are normally used to say that it is us individuals who go to the lending institution, to the banks to borrow. But with the bonds, it's the opposite. It is them, it's the government coming to us to say, Kondwani, lend us money. This is interesting, but it really means to say that why do we not have many people investing in bonds? And this is the same question I want to ask you, our participant, to say, why don't you invest in bonds? Obviously, we would have different answers to these questions. For example, others believe that bonds are only for corporations, for companies. They are the ones that participate in bonds. This is not true, as anyone can invest in bonds. Others believe that for one to invest in bonds, maybe you have to have huge sums of money. And this is not even true. As we'll see later in my presentation, that the minimum isn't that amount that can give you headache. But the question is, why do we not have many people investing in bonds? I'm sure that maybe one of the common answers will be to say that what are my benefits? Because if you are investing in something, obviously, you should be aware of the benefits, and you need to be happy of the benefits. Therefore, let us look what the benefits. So for us, I'll present this scenario. So let's imagine we have got a lady by the name of Eliana. So we have a beautiful lady, Eliana, here. And Eliana bought a 2-year bond on 1 January 2023 with a face value of 400,000. So remember, a face value is the amount you receive at the maturity of the bond. So Eliana bought a bond on 1 January 2023 with a face value of 400,000. And the bond stipulates that the coupon rate is 10% per annum and is payable twice a year. And the expected rate of return is 20%. So based on our scenario, we are saying that the cost that Eliana will pay will be at 4,151. So the cost is normally calculated based on the return, which is the yield. Remember, the yield is what you as an investor, you will tell the broker that I want my yield to be so much. So you tell the broker, and this calculation is done by the broker. I know others are already getting worried to say, so I need to do some calculation, mathematics. No, don't worry. That is the duty of the broker to calculate the cost for you. What you do is just to say, I want my return to be so much. So remember, we want to understand the benefit, and we have this scenario to say, we have got this lady, and she has bought a 2-year bond. At the end of a 2 years, she will receive 100,000. But today, she will only pay the 4,151 as her cost. But that is not only that. There will be coupon payments, and this bond, the terms is that the coupon will be paid twice a year. In other words, if we take 10% of the face value, we get 5,000. We get 10,000, and twice a year we divide it by 2. So every 6 months she'll be receiving 5,000. So already I think it tells a story to someone to say that, okay, so today I'm paying 84,000, but in 2 years' time, I will receive 100,000. So we normally say that bonds can also be issued at a discount, as we have seen in this example. Today you pay 4,000, but in 2 years' time you receive 100,000. But in between you also be receiving the coupon. The coupon, you simply put it there, interest less. Now let us summarize this scenario. Remember, we are looking at the benefits, and the first is that you receive cash income from coupons. So as you can see here, we have got a coupon payment. Because it's a two-year bond and the coupons are coming semi-annually, you receive a maximum of 4 coupons. So the first year, you receive 5,000 in June, another 5,000 in December. When you pay second year, you receive 5,000 in June and 5,000 in December. At the final year, you will not only receive the coupon, but also you get your face value. That is the first advantage. Perhaps the second advantage is that there is predictability of cash flow. So we can compare to shares. We say that with shares, one of the return is dividend. But you would agree with me that when it comes to dividend, you cannot say with certainty that this year I will receive so much, because other factors play a role. For example, the profitability of the company and the future prospect of the company. But with the bond, you can predict. For example, you can predict to say that at 30 June 2023, I will receive 5,000. And 31st December, I will receive another 5,000. So you are able to predict your cash flow. And maybe perhaps one thing to note is that you don't go to remind them that I think my coupon is due, especially with this government securities. It's automatic. On 30 June, or at the date that is stipulated, you receive automatic arrests that you have received the coupon. We go to another benefits of investing in bonds, and we are saying bonds can help offset exposure to more volatile stock holding. My colleague has already explained to say that when it comes to the issues of investments, do not put all your eggs in one basket. Myself, I like another English proverb that says that if you want to taste the depth of the river, do not taste it with both feet. Obi that. Yeah, so when it comes to investment, you need to have a basket. You need to have those ones that are risky and that one that can help to offset that risk. For example, you can combine, you can have equity as well as bonds. So bonds play a role in countering the potential risk associated with investing in equity and other more volatile assets. We go to another benefit, and we are saying period of payment in the event of liquidation. So let's assume that it's a bond that is, we have bought a bond from a private company, and that company is going into liquidation. When a company is going into liquidation, they sell the assets, put them together, and then they have to distribute to the creditors. The problem comes when it's and what we call an insolvent liquidation, whereby the assets will not be enough to pay everyone. So with this one, we are saying that you as a bondholder, you still belong above other holders of other securities, like shareholders. Shareholders are normally ranked the last. So you as a bondholder, you belong above them. So we have seen the benefits of investing in bonds, but I always tell investors that with any investment, when you think of any investment, also ask the risk. Someone comes to you to say, I invest in this, ask that what about the risk? So it is important to also mention these risks. They don't happen or occur often, but they are worth mentioning. So the first risk is interest rate risk. So this we are looking at where the interest rates are going up, and you already bought a bond, let's say 10-year bond, and interest rates are going up. Your bond will be less attractive to someone to take over, to buy. So the first one is that interest rate risk. And then we have liquidity risk, to say that you want to come out of the bond, you want to sell the bond before the maturity, and there are no buyers. And finally, is credit risk. So if credit risk, you put simply put the issuer at default. So the default in paying maybe the coupons or the face value. But normally with government security, the risk of default is minimum, if at all it exists. We go to minimum amount one can invest in bond. As my colleague has already said, with the bond, we have the primary and the secondary market. So it is important to appreciate the minimum in both markets. So for primary market, the minimum is only 1 million, and thereafter in multiples of 100,000. What about the secondary market? The Malawi Stock Exchange. The secondary market, the minimum is only 1,000. Imagine just making a sacrifice for a day that I'll skip lunch today. I want to be a bond holder. It's possible. With 1,000, you can be a bond holder. So as you can see, it's not for those that have got a huge sum of money. One thing I want to mention is that this bond, we shouldn't confuse them with the treasury bills. So yes, both one way in which the government borrow from us, but with treasury bill, they are for short term. But it's worth mentioning to say that with treasury bill, the minimum is 10,000. Let me finish with this quote. Once upon a time, Warren Buffett said, price is what you pay and value is what you get. As we are thinking of these investments, yes, there's a price we are paying, but the value is too good to be ignored, as we have seen that there are many advantages for investing in bonds, the coupon payment, the predictability of cash flow. You are ranked first when it comes to liquidation. All right. Thanks for listening.
Life is a journey, and each day presents itself with new challenges and opportunities. That is why, at the Malawi Stock Exchange, would want to walk beside you as you pursue your goals and chart your own path. Investing on the Malawi Stock Exchange is an opportunity that is available to each and every Malawian. By buying shares and bonds, you embark on a journey of building your own worth and that of your loved ones. The process of investing on the Malawi Stock Exchange is easy. You simply need to select a broker, open a brokerage account with your broker for free, and start investing. The broker will also guide you on how you can open a central securities depository account with the Reserve Bank of Malawi, where your record of ownership for shares and bonds will be securely kept. Start investing today.
A very good morning, everyone. Thank you, Regina, and thank you, Gondwani, for the insightful presentation. My name is Tafa. I am the Business Development Officer at Continental Capital. For those who are asking themselves to say, what is Continental Capital? Continental Capital is a registered stockbroker. Our role is very simple. We help clients to buy and sell shares that are listed on the Malawi Stock Exchange. On a corporate level, we assist companies that want to raise capital through debt or equity on the market. So today, we are going to talk about types of bonds and how to invest. Let's look at the participants in the bond market. We have to appreciate the participants that we have. So you realize that we have what we call issuers. Simply put, these are borrowers, as already highlighted by my colleagues. So in the borrowers, we have got government. They can go into the market to borrow funds from the public. We can talk about corporate companies and also financial institutions. On the investor side, we have households. Now, that is you and me, where we borrow the government or corporates' money. We talk about government, portfolio managers, insurance companies, and also non-financial corporations. Now, we have what we call financial intermediaries. These now, they link the issuers and the investors. So we have what we call stockbrokers, asset managers, and banks. We usually have this question to say, so if I want to invest in a bond, in a government bond, to buy the bond, or if I want to invest in a corporate bond, do I go directly to a corporate company to buy a bond? No, you have to go through us, the financial intermediaries. You have to go through us, the stockbrokers. Now, as stockbrokers and asset managers and banks, there is a market that we use. Mainly the stockbrokers, we use the Malawi Stock Exchange. So these bonds that we are going to talk about, they are listed on the Malawi Stock Exchange. The types of bonds according to issuers. So it is very important to know and appreciate the types of bonds that are listed on the Malawi Stock Exchange. We have corporate bonds and we also have government bonds. So now, what are corporate bonds? Corporate bonds, these are bonds that are issued by corporate companies. And our government bonds, these are bonds that are issued by the government. We can talk about the treasury notes and also the development bonds. We are going to tackle that in detail. Now, the corporate bonds. Corporate bonds, basically, they're issued by private or state-owned companies. They're issued on the primary market and also on the secondary market. My colleagues have already tackled at length about primary market and also the secondary market. On the primary market, what usually happens? So a company can actually choose to issue the bond publicly, or they can actually choose what we call a private placement. So what happens on the private placement? This is whereby a corporate chooses what we call, it identifies what we call an arranger. And an arranger in turn identifies the participants to that bond. So the arranger will identify who is going to participate in that bond. So they identify those that know that are capable to participate in that bond. And then once it's done, they take this to the secondary market. Now that's when that bond is listed on the Malawi Stock Exchange. That's when now you and me, we know about this bond. And at that point in time, we can now, that bond gets to exchange hands. I'll give you an example of a corporate bond. In 2018, the former, it was called My Bucks Banking Corporation at that point in time, now Centenary Bank, they issued a corporate bond in 2018 in excess of about 12 billion. And that bond was listed on the Malawi Stock Exchange. And that bond now matured, but those that managed to participate in this bond, they were actually happy with the returns. And talking about a state-owned company that issued a bond recently, for those that follow media or those that follow news, Roads Funds Authority, they actually issued a bond where we saw the market participants participating in that bond, and they managed to raise in excess of about 32 billion. And that bond is for about 15 years. So these are the different corporate types of corporate bonds that we can talk about, the private and the state-owned. Now, let's talk about treasury bills. For those that know the market, they'll say, now this is a bit off. Okay, a treasury bill, it's not a bond, but we have been having a lot of questions from the public to say, now, what is the difference between a treasury bill and a treasury note? So that's why we had to put this slide so that as the viewers, as the market, we can actually appreciate the difference. Because a treasury bill is issued by the government. It's a government security. But now this one is a short-term debt instrument. It's for those that have a short-term investment objective. We've got some of our investors that say, I don't want to keep my money for long term. I just want to keep my money for 91 days or maybe 182 days, the maximum being 362, 364 days. So these are the tenors that are there when one is investing in treasury bills. The maximum is 1 year. So these ones, they are issued at a discount, and on maturity, the investor receives the face value. So some might be asking, a discount already, Kondwani already highlighted that, to say a discount, maybe an example that I can give. Let's say you want to realize 1 million at the end of your investment tenor. So you invest, today you invest 950, and then on maturity, you get your 1 million. So that is what we call investing at a discount. These are issued by government through the Reserve Bank of Malawi. So we have treasury notes and treasury bonds. There's just a thin line between treasury notes and treasury bonds. Treasury notes, they run from 2 years up to 10 years. But treasury bonds, they are issued in excess of 10 years. They are issued for 15 years, for even 20 years. So that's the thin line that is there between treasury notes and treasury bonds. So talking about the treasury notes, they are paid back within a period of not more than 10 years. So it's for those investors that have a long-term objective. We've got some of the people that say, I want to keep this money for 5 years, or maybe for 7 years, or maybe I want to buy a car after 5 years, or I want to build a house after 5 years. So they can set aside those funds and invest in a treasury note. So the investor gets to receive coupons paid semi-annually and the face value on maturity. Kondwani highlighted this in detail. Now let's talk about infrastructure development bonds. These are issued by government to fund specific infrastructure development projects. So what happens here? The government comes to the market to raise funds. They are very specific about what they want. They are very specific about what they want to do, and they're very specific about what they want to achieve. And usually an infrastructure development bond is done if government wants to do projects for the public benefit. For example, government has been issuing these infrastructure development bonds since 2021. And they have a target that they want to raise. Their target is in excess of about 1 trillion. And what they do, they come to the market as and when they want the funds. As you know that like the government in this bond, they are constructing roads. So as you know that constructing roads is a stage-by-stage project. So they come to the market as and when they want to do, they want to construct roads. You'll see that in Malawi, there's been a lot of developments in terms of road constructions. This is just because of what we call the infrastructure development bonds. So these ones, usually, they offer a higher coupon than the ordinary treasury note. This is to encourage investors to participate. And the tenors, they run from 5 years, 7 years, and the maximum currently is 10 years. Regina spoke about having bonds as one of the great assets to add to your portfolio. Kondwani spoke about the benefits of investing in bonds. I have just highlighted the types of bonds that we have and are listed on the Malawi Stock Exchange. Now the question is, how do we invest? How does one invest in bonds? The first step that you have to take is to open an account with a stockbroker. You can open with an asset manager, or you can open with a bank. You have to deposit the investment amount based on the amount that you want to invest. And then you have to instruct the financial institution to buy the bonds for you. You can choose either they can buy for you on the primary market or on the secondary market. So the requirements that are needed for opening an account, they are very simple. There is need for a copy of your national ID. There is need for your payslip or 3 months bank statement, and there's need for a bill. About investing in a corporate bond. For bonds that are listed on the Malawi Stock Exchange, one can through a stockbroker. So you have to approach us as stockbrokers who will help you to invest in a corporate on the primary market, individual investment intermediaries such as the asset managers. And development bonds. On the primary market, what usually happens is the government releases issuance calendar through the Reserve Bank of Malawi that shows the auction dates of different tenors. It shows 2 years, 3 years, 5 years, 7 years, a maximum being 10 years. So you can actually choose and plan which tenor you want to invest in. So a prospectus is issued with the details of the note or the bond. So through the market participant, an investor should choose which tenor and which bond type they want to invest in. And they have to pre-fund with their market player. So once the market participant has invested, once they've done the bid for the client, the results, they are released on the very same day, and they are communicated to the client if their bid was successful or not. And on the secondary market, the investor can trade the bond listed on the Malawi Stock Exchange through the stockbroker. And also, if the bid is successful, a deal confirmation is shared to the client once the transaction is finalized. Now, I have a sample of a debt issuance calendar. So when one wants to invest in treasury bills, treasury notes, and treasury bonds, the government, through the Reserve Bank of Malawi, issues this calendar. It actually shows to say, at this particular date, this treasury note or bond is going to be auctioned. As you can see, on the 27th of June, there is going to be a 5-year development bond that is going to be issued. So for those that want to participate, get in touch with your market players. You can get in touch with the stockbrokers. You can get in touch with the asset managers or the banks. They'll give you this calendar. You can actually see and plan accordingly. And you realize again that in this calendar, the treasury bills are occurring more oftenly. It is because the treasury bills are issued each and every Tuesday. So if you want to invest in a treasury bill, you have to get in touch with the market player, and then they will invest for you every Tuesday. In closing, I would like to close with this investment advice. It's a quote from Carlos Slim that says, anyone who is not investing now is missing a tremendous opportunity. So what are you waiting for? This is the time for you to get started. Get in touch with the market players. They are there to assist you, to give you the support so that you can invest and have good returns on your investment. You can contact us as Continental Capital. These are our contacts on the screen. We've got offices in Blantyre and also in Lilongwe. Thank you very much for your attention.
Life is a journey, and each day presents itself with new challenges and opportunities. That is why, at the Malawi Stock Exchange, we want to walk beside you as you pursue your goals and chart your own path. Investing on the Malawi Stock Exchange is an opportunity that is available to each and every Malawian. By buying shares and bonds, you embark on a journey of building your own worth and that of your loved ones. The process of investing on the Malawi Stock Exchange is easy. You simply need to select a broker, open a brokerage account with your broker for free, and start investing. The broker will also guide you on how you can open a central securities depository account with the Reserve Bank of Malawi, where your record of ownership for shares and bonds will be securely kept. Start investing today.
Three, are you ready? I am back to tackle some of your questions. Thank you so much for the questions posed. The first question says, if I invest 100,000, will I be able to increase my portfolio afterwards? The answer is yes. On the market, there are a number of bonds being offered. So you're not limited to one bond or to a particular bond. You can participate in all the bonds being offered on the secondary market. At the same time, the bonds do have different maturity dates. So you might buy a bond that is going to mature in 5 years and then another one for 10 years. So you're not limited to how many bonds you can acquire or how many times you can participate in the market. The second question is, who determines the interest rates? There are two ways interest rates are being determined. The first one is being determined by the issuer, whereby when the government is issuing bonds, it determines its interest rate, which is a fixed rate that it offers to the public. So there is also a time where an investor can determine the interest rate of his or her yield. Now, this is the time whereby you want to participate or to purchase a bond. You go to your broker and then you offer your interest that you want to acquire at the end of your investment, which is also known as the yield. At that particular time, that's when you are the determiner of the interest rate. At that moment, the interest rate is being determined by the investor, whereby there is some sort of competition in the market. So people bid on the interest of the yield. So the answer is an issuer can determine the interest rate. At the same time, the investor on yield, they also determine the interest rate. My third question is, do you have brokers in all districts in Malawi? My answer is yes, at the same time, no. Why am I saying no? We are all physically situated in Blantyre. Why am I saying yes? We are able to reach out to all our clients countrywide, Sanje to Jidipa, as well as foreign investors. So for those that are outside Blantyre, even outside Malawi, can reach us through emails, mobile. We are able to assist you. The fourth question says, how flexible is government in paying out coupons? can we end up not being owed a lot of money, meaning by the government, I assume? I would say ever since bonds started, the government has never failed to pay the coupons. So I would give you an assurance to say the government will not fail to pay your coupons. Why am I saying that? The government operates on rules and regulations that comes accompanying the bonds on offer. So do not worry about government not paying your coupons. Thank you. I'll ask my colleague to take some of the other questions.
Well, thank you. I'm back to answer some of the questions. I have good questions here, and yes, they need to be addressed. I'll start with this one because I feel this one is most important compared to others, in my opinion. So the question is, why do brokers ignore small investors? I don't think there's any broker who ignore small investors. In fact, we brokers, we make money through transacting on your behalf. Without you, then we don't exist. We don't have a job. Our companies will not be there. So I don't think there's any broker who can who ignore any investor. Come to us, we are ready to save you. All right, the second question is what is the minimum amount one can invest? So as discussed, as explained in my presentation, the minimum is both in the primary and secondary market. In the primary market, we said that the minimum is 1 million Malawi kwacha, and thereafter in multiples of 100,000. But on the secondary market, on the Malawi Stock Exchange, the minimum is only 1,000 Malawi kwacha. Another question was, is the face value subtracted? Is it subject to tax? So the answer is no. The only tax implication when it comes to bond is the interest element. That interest, the coupon, that one is charged withholding tax 20%. I think I've answered that one. What is the cost? The cost, in other ways, what are the charges? What are our charges? So our charges are very minimal. I'll tell you our charges. Our charges that are the first 50 million, we charge 0.25%. So any amount from 0 up to 50 million, the charge is 0.25%. And anything above that, we charge 0.5%. Another question was, when is the opening for government bonds? So I'll also answer this one by distinguishing the primary and the secondary market. So for the primary market, the auctions is done every Tuesday. That is for the primary market. But for the secondary market, every day. So every working day, this one, you can transact. So the opening for primary every Tuesday, but for secondary, every working day you can transact on that one. The final question is explain how devaluation affect the bonds. So how devaluation affect the bonds? Well, with the devaluation, obviously it pushes inflation up, and when inflation goes up, there is an interest risk again, in that the interest rates go up. And so this one can be viewed in two sides. First one is that those existing bonds that were bought maybe 7 years ago, they become less attractive, in that their interest rate will be less compared to the current market interest rate. But wait a minute, it's also an opportunity for someone who wants to invest the bonds now. Because if the interest rates are going up, it means you get a good return at the end of the day. You get a good interest rate. So yeah, it has got both sides. But it's too good to invest in order to capitalize on the the high interest rates that are driven by the effects of devaluation. Well, I think I've answered all the questions that was raised on my part. Let me leave other questions for my colleague.
Mr. Banda.
Hello, Mr. Perry.
Wow. You know, it is very evident that you're doing so good.
Thank you.
You see, even your business is doing so great. But wasn't it only last year when you were telling me great plans you had for your business, but you complained about not having enough money to invest?
Well, all of that has changed, Mr. Perry. I made a decision to list my company on Malawi Stock Exchange and managed to raise about 2 billion kwacha. I used that money to invest into my business. And now my business has grown at a rate that I could not even imagine.
2 billion?
Yes.
You must be paying a lot of interest on that money.
Not at all. If anything, raising capital using Malawi Stock Exchange has greatly improved the financial position of my business. You know what? The cost of raising capital was under 5% of the total money that I raised.
Unbelievable. So listing is not as expensive as I thought.
And if that is not enough, listing my company on Malawi Stock Exchange has greatly improved the visibility as well as the profile of my company. Now I'm able to do business with both local and international players. And you know, business practitioners, they have confidence in my business because they know my company is listed on Malawi Stock Exchange.
Wow. 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 You know what? I'm very impressed and inspired.
Thank you.
And I too will list my business on the Malawi Stock Exchange.
Please do that, Mr. Perry.
Yeah.
But I have to go now.
Yeah, thank you very much.
Thank you.
Thank you, Mr. Perry.
Malawi Stock Exchange, Malawi's global portal.
Mr. Banda.
Hello, Mr. Perry.
Thank you, viewers. We are getting so good questions on our chat. The first question that has been asked here, it says, who makes a lot of money from this business? Is it the investor, or is it the government, or is it the financial intermediary? This is a very good question. The one who makes money is the investor, because the investor gets the interest on their investment, and not only that, they get coupons that are paid semi-annually. And if we are to look at it from the government perspective, the government has to pay back the money that they borrowed from the public. And on top of that, they have semi-annual obligations that they have to pay in regards to coupons. And on top of that, they've got the interest that they have to pay. So in this case, it's the investor that makes more money. And the intermediary just charges a minimal amount to be able to link the issuer and the investor. So financial intermediary at this point, he doesn't really make much more money. The one who makes a lot of money is the investor. So be assured you are the one winning in this game. And then the other question is, when is the opening of government bonds? When is the opening for government bonds? All right, this one I'll take you back to the presentation that I made, where I gave you the calendar, where I showed you a sample of a debt issuance calendar. So the next one, the next government bond that will be issued is on the 27th of June. That one will be a development, a 5-year development bond. But for those that are already listed on the Malawi Stock Exchange, at any time you can approach a stockbroker. They are going to help you buy those bonds. But if you want to buy on the primary market, watch out for the one that is going to be auctioned on the 27th of June. The next one, an exciting question as well. It says, investing in bonds in a microeconomic environment with a high inflation rate. Okay, so I'm taking it in this point to say, what is the benefit of investing in bonds?
Stock exchange is easy. Simply need to select a broker, open a brokerage account with your broker for free, and start investing. Also guide you on how you can open a central securities depository account with the Reserve Bank of Malawi, where your record of ownership for shares and bonds will be securely kept. Start investing today.
Welcome back. That was quite an insightful presentation, if I have to say so myself. And we hope that you were able to benefit from the insights that were provided by the presenters. There were quite a few questions as well that I wanted to address from the regulatory perspective. One, I think there was a viewer that asked in terms of them dying and then leaving the investment in the bonds. Well, first of all, we hope you don't die after just investing in the bonds. But in the case that that happens, there are procedures. If you recall in one of the presentations, there is KYC that is done. You do provide details, the contact details, the details of the next of kin, so that if there's anything, if there's any information that needs to reach you or it's not able to reach you, there's someone else that they can actually contact. So that is well taken care of, and you don't have to worry that will not, the investment will be sitting idle with no one knowing about it. So that information will be delivered to your next of kin. There was also another question in terms of where your broker has closed down. We also hope that is not the case. But in the case that that happens, as the Malawi Stock Exchange as well as the Registrar of Financial Institutions, there are procedures that we follow in terms of making sure that the holdings of all investors are secure and actually transferred to the other stockbrokers. That has happened before in the market, and the transition is always smooth. And if there are other members who are not quite aware or sure of where the holdings are in that particular transition, it's always advisable to engage the Malawi Stock Exchange as well as the Registrar of Financial Institutions to get those details as well as the information. There was also another question, and I saw this quite often in terms of eligibility of investing on the Malawi Stock Exchange. So this is a market that is free to all. Even you can invest even on behalf of your children. That is allowable. People actually do that. So we encourage you that there's no really eligibility requirements. It's all about making sure that you open your brokerage account, you provide the details, and the brokers will be able to open the account for you where you can actually invest. So you can invest on behalf of your children in terms of now preparing for their future, be it in terms of school fees. As you heard from the maturity of the bonds, they go as far as 10 years. So you can put down some funds right now in the hope that when it comes to 10 years, maybe it would have been at the time where you actually require the funds and you'll be able to benefit from that investment. There was also another comment in terms of now the payment of the coupon or the interest. So that is done as well by the Reserve Bank of Malawi in the case of government bonds, or if it's a corporate issuer, the corporate issuer arranges for that. So, so far we haven't had any instances where that amount is not paid to the investors. That is normally always done. And when you're opening the account, remember you provide the account details. So even the coupon will go into your bank account details. I think with those few last questions, we'll come to the end of today's webinar. There's still some questions that might be coming in. We'll be able to address those ones as they come, especially on the comment section. There's one more that is being handed over to me. If you could allow me to also address it. I think there's also another in terms of how does the exchange support emerging sectors, be it mining or companies with innovative business models. So as I mentioned earlier on, the Malawi Stock Exchange, their core primary mandate is really to provide a platform where companies can come to actually raise capital for their businesses. So for the mining sector as well, if you look at our listings requirements, we actually do provide listings requirements that mining companies can actually follow in terms of now the procedure that they can use to raise capital on the Malawi Stock Exchange. So it is not limited, be it to the financial sector or just the companies that you know that are listed. We're open to all companies in Malawi that are available. All of them can actually come and raise capital, be it through shares as well as through the bond market. So with those few remarks, I would like to thank you so much. It was quite an engaging session. We've learned a lot, even in terms of the feedback as well as the comments that you've provided. We do appreciate that so much. And we hope that in the future webinars, you'll be able to do the same. And feel free to also suggest what topics you'd want us to touch on so that we're also responding to your needs as the investors. Thank you.